TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about whatever you focus on. Rhodes. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Surrender and let go of the past. It's a great card. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully in the moment. Letting go of the past means that you can enjoy the dream that's happening right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials trading up 277, NASDAQ up 87, S&P's up 22. Gold contract following through, up $28.40 at 2,609. Now, gold's, folks, the A to B equals C to D on the weekly is 28.02. So I expect, we're going to get there. That's only a 1-to-1. I mean, the way gold's moving, gold loves moving 1 to 1.382 to a 1 to 5.0. ABC up and or down. Now we're going up right now. Silver up 80 cents, $30.91. Light sweet crude flat, $68.96 a barrel. Notes and bonds. A 10-year note up 7 ticks, trading 115.13. The 30-year up 10 ticks at 126.21. And King dollar right now trading down 243 at 101, 123, Euro 110. Yen 140, British pound 131 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line, take a look at this S&P first. And it looks to me like Monday or Tuesday, you're going after these highs, and more than likely we're going to break them. Take a look at the S&P right now. Now, there's a big contraction of volume today. There's no doubt about that. But that being said, not on the weekly. The weekly has the juice, man. Take a look at the weekly. You're pushing right into the high. The last high up here had, 285 million. And we've done 229 right now. And bottom line, you're right below it. Let's see, what is that? We hit 563 today. It's 565. 565.87. So that's what you like to see. You like to see as you're pushing into a high, you want to go higher, that you get an expansion of volume, and if we close right underneath it, and that's what it looks like we're going to do, this is when you can blast off, folks. That's the real bottom line. So we take a look at the Qs. Now, here's huge divergence. We get the contraction in the Qs today, and it's a huge contraction. 22 million shares, okay, which is problematic, okay? That being said, put this on weekly. Put it on a weekly, it's good. On a weekly, it's good. That's the bottom line. On a weekly, we've done 183 million, and the high was 162. Now, we're not going after the high. We're going after the last swing high, which is... we're at 474. That's 485. That's how that shakes out. Now, what's going to be intriguing here, no doubt, is this, is that we still have these high volume lows that are laying out there. On Tuesday, there's no doubt when you had that rejection of lower price, Wednesday, rejection of lower price, you blasted forward. That's saying, guess what? You're going to go forward first before we back down. We have to keep an eye on these, but the bottom line is that higher prices looks to me like next week because the SPY wants to break its highs. We go take a look at the gold contract. So we have with gold. Gold's been on a run big time. You broke out topside. You broke out with volume. We put this on just a weekly, and you can see how clean it is. I mean, look at this. This is a clean run higher. The way this is set up, when you're looking what I'm drawing out here, the way this is set up, 28.05. That's the A to B equals C to. Now that's only a 1-to-1, and as I said, earlier, gold loves doing a 1 to 1.382. That means you go 10 points on the A to B, you're going to go 13.8 at least. Might go 15. So I expect that's exactly what we're going to have, and this is where it's going. So picture this: the dollar has been holding up in a monster way. It had a huge counter trend bounce. Looked like it wanted to go a lot higher. Now the bottom line is that, we'll see where the fluctuation comes. It did reject lower price today at 100.883. You're at 101. But this is an anemic bounce also. So when we take a look at this bounce, it never even got to a 0.382. Yeah, it couldn't make a 0.382. It's just over a 0.23. So I suspect that this dollar is going to back down. And if we put this on a larger basis, what you're going to see, which makes sense, first time down to the swing point, a rejected lower price, and we'll see how this shakes out, because if we get under, basically the 100 point, then you have 93 gain. So that is a monster move to the downside, folks. Silver. Take a look at the silver market. And what's intriguing here is that these are like two different markets, man. Silver, bottom line is, looking good today. No doubt about that. 76,000 contracts. You're up good. You're blowing away at the swing point. We take this and put this on a weekly. On a weekly, it doesn't look bad. On a weekly, it's like, yeah, you're going to go for the highs again, which is, in this case, 33.50. Go to the GDX. We take a look at the GDX. This is on its way to 45. Right now, we're trading about 43, I think. 39. We put this on a weekly. And what you're going to see here on the weekly is that we're going right for this high. The high we're talking about here is that, it's 42. Let me bring it back more. Yeah, 45 is the high. That's 46, 40, 46. It's going after it. Now, we do have a traction of volume once again. So, a lot of moving pieces here, but gold's on a run in a big way. Stay right there, folks. Come right back. We have the Dow Industrials up 275. Nasdaq up at 94. S&P's up 22. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Yes. Welcome back, folks. Sorry about that. We get the Dow Industrials trading up 287, Nasdaq's up 98, S&Ps are up 24. Let's get into the Gold Bugs Index, HUI. Why the Gold Bugs? Well, the bottom line is that this is where you want to start keeping an eye and keep in watching these divergences. So right now you're up 607 at 327. Yeah, look at this. Okay, so this baby here, we're heading for the highs. Now, what's going to be interesting about this, watch this, folks. This is kind of cool. So when I take the last retracement, okay, the last retracement was a 7-6 retracement of the move. Now, that is a very deep retracement, which we know that we got in the gold market, okay? So what that means is that most times when you get up to the highs, it's 100% move or move, and you can't expect more than that. Now, what I expect we are going to see is this is when the euphoria comes in, and it'll come in before this, okay? But this is when, you know, the euphoria will be very large, and that, I suspect, is going to be the first time that we start getting a pullback. We take a look at the XAU. Same type of setup. Put this on a 3-year. Now you can see, now this is getting interesting, because the XAU is stronger than the HUI. Now, what that normally means is this. Now watch this. This gets wild. So we're at 160.11. 171's the high. I put this on a longer basis. And let's see what kind of retracement we got on this. Okay, so on this, we got a 68% retracement. That's still saying the same thing, that normally when you get up to the high, that would be it. Now, this is where there's going to be a lot of different trades on this. And one of the biggest ones is going to be this. So picture this. When you're in the XAU, the bottom line is that you can hedge. You know, if you remember if you're in this gold market 2001, 2002, up to 2011, you can remember the amount of money that was lost by gold companies, particularly in Newmont, that they were hedged out in the gold market. And so they never expected gold to go from $252 up to $1,100. Newmont themselves lost a fortune. So when it's getting up to highs, we're really gonna have to watch this like a hawk, because what you do have, so picture this, picture how this works, folks, okay? Picture we all own an old gold mine, right? And we're looking at gold at 2608. And at the top of those levels, that would be saying that gold's gonna basically break 3,000. Well, at that level, we're gonna be sitting around looking, saying, hey man, you know, I think this might be too fast, too soon, and I'm going to hedge, I'm going to sell into the futures market. You got to remember something, if you sell into the futures market, what does end up happening, and they wouldn't be selling into the futures market like you and I do on a public exchange, on the CME. What they would be doing is that they would have some bright banker sell them a bill of goods, and they'd make a derivative just for them. And what ends up happening on that derivative is that if, in fact, it goes over a certain price, well, then the gold companies themselves, instead of basically making money, they start losing money hand over fist. Okay? So this is going to get really intriguing, but that's something you got to think of. That's the first part. The second part is that we got to get our heads wrapped around currencies now, because what also ends up happening is, like, we look at the Canadian dollar, okay? 1 second. CAD. Because there's so many good Canadian stocks that trade in the U.S., okay? It's important to look at the Canadian dollar, because what ends up happening as our dollar goes to hell in a handbag, because that's what it looks like it's going to do. I mean, it's strong right now. It has been strong, okay? But the bottom line, I expect it's going to get lower. And if that's the case, what ends up happening, if the Canadian dollar is right now, it's 135, you know, to basically 1, which is very weak, okay? You know, if this starts getting strong, if you remember, here, watch this, I'll bring it up, actually, this is crazy. It was almost went to par. There's 2011. Yeah, it did go to par. It went to 94 cents. And when that was happening, folks, okay, what you had happening is that the amount of money that Canadian stocks were losing was huge because of the fact, yeah, watch, I'll show you how this works with an eagle. So we bring an eagle up. Well, see those 10,000 employees? Okay. Let me see this one. Let me just see where they, okay, so now Ontario, Australia, Mexico, Quebec, yeah. So it's still, they're still in Canada in a big way. They're growing by 5%. And Ontario, yeah, this is a big Canadian mine. That's the bottom line. So what ends up happening there is that their expenses are in the Canadian dollar and they're getting paid the US dollar. So what happens is that they don't make as much money as you thought they would. The cleanest plays go like this. The cleanest plays go that they're actually in Las Vegas, Nevada, okay? They're in Nevada, and when you're dealing with US dollars and you get paid with US dollars, it's, to me, that is really cool, because what ends up happening, you don't have to get into the fluctuations of the currency versus the price of gold. You know, it's, but when you're aware of it, it's cool too, because when you're aware of it, you know, you're trying to figure out that, okay, gold's going through the roof, but what is also happening is that their currency is going with it, meaning it's getting too strong, and if it gets too strong, well, guess what? It's all about what can be brought to the bottom line. That's what it comes down to. You know, we go look at the Aussie dollar. We bring this up. What you're going to see in the Aussie dollar here is we're trading at 67. And we do this fluctuation. Now, see, the cool thing here with the Aussie dollar is that it's been at this level for a long time. And this is weakness, that's for sure, in a big way. And, you know, the companies that are dealing in Australia, that's a huge plus. I mean, a monster. Because number one, it's been there for a long period of time. Number two, the jurisdiction in Australia, they are flat out a mining country, period. Everything. You know, I mean, the bottom line is that that's a huge part of the GDP. We get the Dow Industrials up 293, Nasdaq's up 110, S&P's up 26. Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. Dow's up 298, Nasdaq's up 109, S&Ps are up 26, and let's go look. This is going to get, well, it already has got down and dirty. Find this again. So you get Elon Musk, right, folks? Okay, is having a tough time in Brazil right now. This is a beauty. Here it is. Okay, so what you had happen out here today, Brazil withdrew 3.3 million from the X account, formerly Twitter, and Starlink to pay for fines imposed by the Supreme Court. Continuing a dispute that has led to a blackout of the billionaire's social media service in the country. The court ordered the transfer of funds on Wednesday, and the accounts have since been unfrozen. Musk is mirrored in a bitter standoff with Brazil's top judge, who's leading a campaign against fake news and hate speech in Latin America's largest nation. The thing here with this, folks, okay, which is so screwed up, is that without defending, Musk, Twitter, whatever, okay, this is totally bogus because these are all separate companies. And, us in the United States, we live by the rule of law. And the reason that you have separate companies is just like something like this. So, it's totally bogus. In Brazil, we'll see how this shakes out, man. But people are going to be worried about doing business in Brazil because picture you have a company, you have a dispute. That dispute, you end up losing it. You get a fine. Well, normally what ends up happening is that, you get a fine, you pay the fine, not pay the fine. If you don't pay the fine, they're going to go after the company, right? They're certainly not going to go after other companies that have nothing to do with the aspect of this other company. But yet, that's exactly what the Supreme Court, this is the chief of the Supreme Court, too. So it's like, that's exactly what they have done, and now they've basically taken the break. So we're going to hear a lot more about this. And, us 3.3 million, that's not a lot of money. There's no doubt about that. The concept, however, is a huge problem for Brazil. Because if you're doing business in Brazil, and, there's plenty of good businesses in Brazil, they're a commodity country, and you get in the middle of a, dispute, and you don't know whether it's real, not real, whatever, okay? The bottom line is that what that is showing you, now, Musk is a firebrand, there's no doubt about that. That's why the judge is claiming that he's going after him because of the aspect of fake news and all this. Well, bottom line is that, yeah, you can go after them all you want, but you can only go after that company. You certainly can't go after him personally. You can't go after his other companies, and that's what they've done. And they've not only done it, what they've done, they've just taken the money out of the bank on them, too. And not that, that's not a lot, but you get the concept. The concept is a real problem. My take on it, anyway. We go take a look at some of the higher vol. Well, actually, ADBE. Let's go take a look at Adobe, because Adobe came out with numbers that got smoked last night. You're down $48. You're trading $537. Huge volume. Pull this back a little bit. Okay, so now you're coming off a swing. Yeah, but look at this. This gets interesting, too. You're coming off a swing, but you're coming into where the strength was also. Now, the strength had 32 million shares traded. This week we only did 23. That's a lot. Now, we'll see whether I can get into it, though. And when I say getting into it, it's 534. We went to 526. But 534 is where that strength has taken place. And it's been fluctuating in between these numbers. Now we take a look at some of the higher volume equities that are out here today. Okay, so you get NVIDIA flat. The Palantir is up another 52 cents. Let's get some action going for it. You have Uber's up $4. That's a big number. Uber Technology. Take a look at Uber. Oh, trading 72. The low for the year is 40. The high is 82. Get some volume today, but now see, this is where this gets interesting too. See, the volume is exploding. Now the the price is up $4. Okay, so it's 5%. It's not bad, but most of the time when you have something that explodes on volume, you actually get more price out of it. Put this on a 3-year weekly. Oh, that's a good setup. You rejected lower price. You did it with lighter volume. It's not that it does not have a high volume high. So as you're hunting over the weekend, folks, okay, if you're hunting equities, what to look for is look for high volume highs. You've had a fast pullback, and what tends to happen is that as we accelerate forward again, it's the high volume highs, your probability goes much higher that you're going to get what you need out of it. And when you look at those high volume highs, it's crucial. Now, if we go to Newmont's been on a run, of course, and we'll put this on a weekly, because it's approaching its last swing high here. Its last swing high is laying out at, what is that, 55. Right now, we're at 53.75. We did get a slight expansion of volume. Now, the cool thing here is, oh, baby. Costa, I know you're out there, man. Listen to this one. Holy cow. Okay, so 40. That's 63, man. We're on our way to 63. Right now, you're 53. Look at this. An ABC up. Yeah, got plenty of room, too. 63 is the number. It broke the B point out here this week. It broke it with volume. You got gold running simultaneously. Pretty cool all around, no doubt about it. And you can see what does happen, folks, is that when the small commodity stocks are running, this is when the IWM runs. So, IWM has good volume out here today. You're up 470. Didn't have the juice, it had juice yesterday, but not as intense. Stay right there, folks. Come right back. Industrials right now up about 269. Nasdaq's at 106. S&P's up 25. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Dow's up 280, Nasdaq's up 108, S&P's up 25. And if we go look at Vista, folks, you know we've had Fred on plenty of times. You know, it's breaking topside, that's for sure. You know, right now, I mean, the bottom line is that you talk about volume behind the move, man. We're at 70 cents, and 7 trading days ago, you were at 53. Now, when you take a look at this chart, what you have here is that your next move, 75 cents is the move. Now, what's so cool is that you can see we're coming into 75 cents with volume. 2.8, 2.3. We haven't hit it yet. But you get the expansion of volume. I expect it's going to break that. Your next move after that is the $1.12. And then if we put this on a monthly, you can see the type of base that it's built. The base is huge on this. And, you know, the way this goes, folks, the longer the base is, the more probability is that you're going to go pretty high. And when I take a look at this, it's like $2.09 is game. Now, right now, you haven't broken that downtrend from $2.09, but I expect we'll get there. We'll see, how long it actually takes. Because when you have gold at those numbers, and you're building a new mine, now of course the expense ratio has gone up for all these gold companies. That's the bottom line. Now, what is intriguing is this. That being said, the amount of oil and concrete they use is huge, and so oil, has gone down dramatically. So that expense ratio inside of the oil ratio for the miners is going to get down pretty dramatically. But you always got to keep that in mind because oil fluctuates so much. That's what it comes down to. The cement cost does not fluctuate as much as oil does. But oil is their, biggest expense. That's what it comes down to, keeping all those things going. So we'll see where the whole thing is going to shake out. I expect this thing's not going to stop, though. Get the expansion. You built the cause, and the patience is the whole ball of wax. And what does happen, what you can see, is that the way that the gold and silver market works is this, folks, is that you'll build cause for a certain amount of time, and then explodes. You build cause, and explodes. You build cause, explodes. That's on the way up. On the way down, same type of deal, man. When that gets hit hard. And I'm just explaining that. I'm not expecting it to go down, okay? Retracements, yes, but we're just at the beginning of this move. And what has happened is that you have a very small market in general. You have the dollar going the right way. The interest rate structure is going the right way. So fundamentally, there's a huge push behind the fundamentals that when you do the numbers inside of the gold or silver market, they're good. That's what it comes down to. Now, we go to Heckler. Let's look at Heckler for a second. So Heckler, November 6th is the next time they're coming out with numbers. This is at a yearly high right now. And you can see, the bottom line is that, these numbers, this year and next year are pretty consistent. Now, they've gone up because of the fact that gold's gone up so dramatically. This year they look to do 900 million. Next year 941. We get into Newmont and Barrick. You're going to see some numbers. These are the two biggest gold companies out here. I mean, Newmont. Look at this. Newmont's looking to do 17.9 billion this year. Of course, they bought Newcrest in Australia. They bought it right at the right time. Last year they did 11.8 billion. This year 17.9. Next year 19.3. Big numbers. If we go to the Barrick Gold, symbol is GOLD, you do the same exercise, and what you're going to see this year, 13.3. Next year, 15.4. Now, watch this. This is important to understand. So out of the 13.3, 10.4 is copper. No, 10.4 is gold. 795 million is copper, and other metals 252. Now the cool thing here is that they, number one, are the jurisdictions that they're in is huge. Meaning, the Carlin Trend, okay, is one of the biggest trends in Nevada, okay. Cortez, I'm not sure where Cortez might be in Canada. I believe it is. Bottom line is that when you see these numbers here, this is natural growth. That's a huge differential. This is natural growth versus when we look at Newmont, that they had to buy the growth. And this is where, when you get Mark Bristow, who's an amazing CEO, that's who you're banking on. You know, if you remember Rango Resources, okay? The bottom line, yeah, actually, let me do this. Watch this. Because this guy, let's see, page. Pull this up. There we go. There we go. Let's see how much he still owns of this. Because Mark, he had his money, I mean, he was the biggest owner, biggest CEO in all the gold companies. Yeah, I'll do it this way. 1 second. You know. Okay. Pull him up. He's going to tell us. Okay, so here you go. Watch this. He owns 6.3 million shares for 130 million. You don't see that, folks, in any of the gold companies. This is one of the biggest ones. Well, you do see it, but this is a very large holding, and he just doesn't sell. That's, well, let's see. Right. Look at a 321. Yeah, cool. No, he hasn't been selling at all. Nothing. Zero. Big number. You know, hey, listen, man, when you get the CEO behind the deal with his own money and he's growing the company, it's a big deal. I like sitting in that place. I particularly like sitting in that place because I know the guy too. And, you know, when we were doing all the gold shows, we were always next to each other. So I got to talk to him a lot. I was watching him do the numbers. We were talking gold. You know, he was giving me a really cool education about the currency splits. And the biggest part was that he goes, you know, where no one else will go. He's in the Congo. The reason that he grew up in Africa, and he was the commissioner when they actually split up the gold companies in South Africa. And what he couldn't do when he was doing the split up, he couldn't self-deal himself into South Africa. But what he did do is that, and this is how Rango Resources, you know, bottom line, with such a strong stock, he could, as long as he was paying up for it, get other mines in Africa. And what did he do? He went to the, number one, the most dangerous place, but number two, West Africa, folks, has the most amount of gold on Earth right now that we know about, and the least expensive to get out of the ground. Stay right there, folks. Come right back.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We had a question about the GLD of exhaustion gap. Now, check this out. The GLD is actually an ABC structure up. Has another 10 points behind it. So if we take a look at the GLD, it's trading at 238. This is the ETF for the gold market. And for the physical gold market, folks, okay? And we take a look at this and have it set up. You're going to see it's a clean ABC. Man. You're breaking the B point, breaking it with volume. Bottom line, 258 is the number. We're at 238 right now. So you're going to see a lot more action. The bottom line. And I can understand, trust me, why what ends up happening. And by next week, folks, okay, we'll have the Skype up, we already have the Skype up, but the whole ball of wax, okay, be able to be calling in again. And simultaneously, you can either call in or just use your voice. Guess what? We can interact, just like the guests interact when you see what I have a guest on, okay? So it's going to be really cool. And, of course, we're going to gauge gold market because we know when we get too many calls, it's a problem. Bottom line, up until yesterday, we got no calls. Okay, well, I get a couple, but that's it. Nothing heavy, and yet these stocks have taken off like a rocket ship. Okay, because that's what gold does. That's the bottom line. When they take off like a rocket ship. And I expect the same, because when we go take a look, you're going to have we're cutting interest rate structure. When you cut interest rate structure, it goes against the currency of the country. And bottom line is that we'll still be a strong dollar in comparison to, whether it's the euro, the yen, the won, okay, the whole ball of wax, okay? That being said, though, what does happen, okay, is that's when commodities take off. And this is where what's going to be intriguing is to watch the oil market, because if the oil market doesn't take off, that's problematic. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great weekend, folks. Have a safe weekend. Back and visit Tommy Monday morning. Kicks us off 9 a.m. Great show, folks. Bam! Look at him, folks.